Hey everybody, it's Pete. Welcome to today's episode of Stock Trading Pro. Our stock market live today has a lot to talk about. Just want to make sure I say hello to a couple of people today. John Lash actually wanted to say thank you for signing up for our order flow masterclass. I hope you like that. If you have any questions, make sure you follow up with me. Look, what's going on in the market right now and how's it making you feel? That's what we want to answer the question today. If you feel like your head's spinning around and just when you thought that you had everything figured out, you knew exactly what was going to happen next, the market really threw us for a loop yesterday, especially in the morning. Raise your hand if you were watching these news stories yesterday. I'll just pull this up really quick. Coming off of a 3-day weekend, reading this news story about Russia, Ukraine, how that's going to affect the market. Raise your hand if you went into yesterday saying, okay, energy is going up, tech stocks are going down. I know exactly what I'm looking to do. I know exactly how I'm going to trade today, and I can't wait to be aggressive on those ideas that you plan to buy. The market did pretty much exactly what you did not expect in that first hour to 90 minutes of the day, maybe even a couple of hours. Had a midday rally yesterday. That rally's following through right now. S&P 500 futures are actually up almost 28 points right now. We're going to take a look at yesterday's price action. We're going to spend some time on whether or not today you should be buying stocks on the dip and which are the best stocks to buy now. We want to talk about something that was mentioned briefly in our coaching call, which was position sizing and when to get bigger. I'm also going to break down something today that I think is kind of cool. We spend a lot of time here on our stock market live stream talking about scripting out, game planning, and all that kind of stuff. I want to kind of take you behind the scenes today. And one of our members, Clyde, who's a relatively new member, been with us maybe for a couple of months, wrote the absolutely perfect script for a game plan. And I want to share it with you because I hope that it'll give you a little bit of a deeper insight that before you go out there to buy stocks, there's a lot more to it. And I just want to give you an example. We had somebody who is new to our community just recently, just signed up, and he's in our Discord for the first time. Put his first stock pick out there, and he basically just said, I'm expecting this stock to go up today. Versus what I want to show you here, which let me just pull this up because I think it's kind of cool, which is this. This is what a real game plan looks like when you're actually looking to put an idea together. So we're going to spend some time talking about that today. We're going to break down everything that goes into that idea. We're going to really spend some time today talking about which type of stocks you'd be looking to buy when the market dips and you're looking for that reversal, which we're kind of getting here this morning. So there's a very big difference between buying weak stocks on a dip versus buying strong stocks on a dip and how that plays into the market. The S&P 500 hit this one level that was 1, 2, 3. It's hit it like 5 times now and continues to hold that bid. Is that technical analysis magic? I don't know. All I know is this price keeps holding. If you ask me right now, am I bullish or if I'm bearish right now, I would say short-term bullish, looking for an oversold bounce, but long-term bearish. So you're kind of fighting those two battles. So you have to actually decide right now, what is the time frame that you're trading on? So we got a lot to talk about today. This video is going to be pretty fun. So stick around. I'll be back in just 1 second. Okay, so thank you so much for joining me here, everybody. I want to make sure I say hello to my buddy, John Bates. How's it going? Good morning, pal. Min Vai, always love to see you in here. Thank you so much for joining us. Raphael, hey, how's it going, man? How are you? All right, great to see you here this morning. Same, Joseph O'Brien. Good morning, Franz. How's it going? Okay, so what do we got going on in the market right now? I think we need to first start out with how stocks traded yesterday compared to what we thought. I think pretty much all of us, again, reading the headlines coming out of the UK and how this was going to play into energy stocks. All we saw yesterday were conversations about energy and oil to 100. And if you woke up yesterday morning, and we're going to really bring this home, this is where it opened, and this is where it traded down to 2 o'clock in the afternoon. The market had a little bit of a relief rally yesterday, but just got absolutely clobbered. Now, this is where we're going to separate having a game plan going into the day and following your game plan versus just trading that short-term price action, because it's very tough. We actually had somebody ask me yesterday on the day trading side of things, when I'm day trading stocks, do I go down to the 1 minute chart? And I don't. I used to when I first started trading 22 years ago. I don't like to have that much activity as much anymore. I'm looking for stuff that could move on the day trading side from hour to hour, not necessarily from minute to minute. I don't trade penny stocks. I don't trade OTC stocks. I just stick with the market leaders. But here's the interesting thing. So we went into yesterday, and this is really the mindset of having and scripting out a game plan. And I'm going to share Clyde's game plan with you as well. But I also want to talk about something else, which I just want to bring up on the screen really quick. This here is something that I show on a daily basis, right? We talk about, I give this to the community every day. It's got earnings, it's got the top stocks, it's got the sector rotation, right? It's got my swing portfolio in there, stocks in play, ETFs, and then the sector stocks, right? So we get a lot of requests for this. So what we did, the two biggest requests that I get by a mile from traders are, how do I put together research documents like that? And we're actually going to take that a step further with today's game plan outline that I'm going to show you again in a second. So how do I build out a research document like this? And number two is, can you show me how to set up my screens the same way that you have your screen set up? So what we did was I put a template of this document into our Facebook group. So we have a Facebook group that's Top Trading Pros, absolutely free. Not going to sell you anything in there. We'll ask if you want some help, but we're not going to sell you anything. So this template, this whole research document, you can download a copy of this for yourself. And there's a 30-minute video in there where I walk you from screen to screen to screen on exactly how I have my entire active trading setup. So if you want to get both of those, the video and the template, there's a link in the description here. Whether you're watching this live now or you watch it on the replay later, there's a link in the description to join our Top Trading Pros Facebook group. So whenever you have a chance, click on over there. And then when you get in there, you'll see it says guide in there. And that's where you want to get in there and download it. So, you know what, maybe I'll just pull it up for you so it's a little bit easier to find. I want to answer this question for everybody because it's by far one of the most common questions that we get. So if you make your way over to the Facebook group, you want to click on over here, guides, and then you want to scroll down to over here. So you see there's a couple of videos. There's 3 steps to trading success. There's the trading screen setup, and then we have the sector rotation worksheet. So if you have a chance, you want to jump in there and join. We have 1,100 members in there right now, almost 1,200. Jump in there and watch the video, watch the 2 videos, download the spreadsheet. And then here's what I want to ask you to do. So if you start watching those videos and you download the sheet, but you're not exactly sure how to use it, that's the whole point of being in the Facebook group. We have a little bit more interaction than we do here on YouTube. Obviously, the live streams and that stuff is awesome that we're doing now. Leave comments inside the Facebook group, and myself and my team will get back to you and help you understand how to use that stuff. Because look, our job, what my mission is right now, is I want to help you understand what great ideas look like, but something that we talk about all the time in our coaching, probably takes up a lot of time in our coaching, is that being prepared, both with your screens and, you know, again, with the list of stocks that you have. And again, sector rotation, we're going to talk about rotation today, and specifically over here, this sector, consumer defensive. I can't stress this strongly enough. If the market is banging your head around right now, if the stock market's making you confused, being prepared makes most of that aggravation and frustration go away. Not all of it. I'll tell you straight up. Like, definitely got a few extra gray hairs the last week or so with the way the market's going back and forth. Inside of our Discord community, we're kind of joking around now that we went from rotation, sector rotation, over weeks and months to days to hours. Now there's a running joke that it seems like it's every 5 minutes. I don't go below the hourly chart as far as the day trading side of sector rotation. But if we take this a little bit deeper and we do look at the rotation coming into today from Tuesday to Wednesday, you can actually see that there's still a couple of pockets opportunity on the monthly rotation, but the weekly over the last 5 days is not awesome. So we're actually going to take a look at consumer defensive here, which we actually have here. So what you want to do is you want to take this list of stocks in consumer defensive, and you want to make a separate watch list of those stocks. So you can go in, download the sheet for yourself, and put it in there. So those are going to be some of the stocks that we're going to be taking a look at today. But first, we have the market hit a big support level, rallied middle of the day yesterday, which was kind of a vicious move to the upside if you happen to be watching the market on the day trading side of things. That has now translated into looking at some swing trading opportunities. And if we took a look at the picture of the market and specifically the mini S&P 500, this is where we are right now compared to where we were yesterday. This was the rally yesterday. We maintained that rally, and now you can see we're actually up 33 and a half handles right now. And again, that's the language. If you want to talk the language of the futures markets, handles is, you could say points are handles, but if you want to sound really smart, you say handles. So we're actually rallying now. So what does that mean in the big picture of things? So this is where we start to put the pieces together. And this is actually, we're going to start to get back into this game plan here that Clyde put together. So the big picture of things here, you can probably see this a little bit better on this S&P chart, but you can see here, we keep finding support at this 4,300 level. Now, I want to get this across really quickly because we talked about this in Morgan Stanley yesterday, how Morgan Stanley kept hitting this bid. And I don't believe that we talked about it here on YouTube yesterday, but I want to make sure we bring it out again. The reason we accept risk on trades is because we believe that a stock is going to move towards our profit target. And we build this argument up by stacking the order flow. Again, stacking the order flow is the market, the sectors, the industries, and then the individual stocks, right? We build this argument that there's a good chance of our profit target being hit versus our stop loss being hit. So there's a good chance of it going in that direction. That's different from the, I believe support is going to hold. That's a very big difference because support without order flow is not the same thing. They're two different contexts. So I want to translate that into the way how I'm looking at and game planning for the S&P 500 today. And I want you to kind of level up your thought process if you're not doing this already to really understand that there's so much more that goes into having conviction, taking risk, and holding those good trades through dips because you're expecting a bigger move. So we're going to use the SPY ETF and Morgan Stanley yesterday as scenarios where support held, but that doesn't necessarily mean that we are going to have a high probability of moving in the other direction. It just means that we stopped going down. It's not the same as a high probability of going up. So I want to walk you through first. We're going to take a look because we talked about this in Morgan Stanley yesterday. You can see we found bids over here, rallied, held a bid, then support. And then we had a conversation yesterday about it coming down to the support and whether or not it was a good idea. And you can see the SPY ETF kind of did the same thing where this was a significant level right across the board, right around 430. So today's theme was buying the dip. So what I want to do right now is I want to classify what buying the dip means and how that translates into position size. The scenario that we just showed you in Morgan Stanley and even in the SPY, well, Morgan Stanley is actually a pretty interesting example because it just pulled all the way back from all-time highs, but it came all the way back into support. So buying this dip is dramatically different than buying a stock that has rallied and pulled back. So I want to make the distinction between this because if you think every trade scenario is the same and that translates into every trade has the same risk and every trade has the same share size, that just means that we need to work on your edge and how you define an A+ trade versus a trade I could see, but maybe not necessarily an A+ trade. So we talked about yesterday that this Morgan Stanley trade, I could see it in the short term. It held support. The market held support at that same level. Maybe a day trade, maybe a day swing trade from one day to the next, but that's it because there is no order flow. When you move over to other ideas that have dips, such as, let's just say, D-Dog, for example. So D-Dog actually rallied and pulled back, and you could actually make a pretty strong case that this stock actually has short-term order flow. So buying this dip versus buying this dip has very different connotations for the conviction level of follow-through. So I want to walk you through this, and I want to now walk you through the trade idea that Clyde put out there, and then I'm going to give you a bunch of stock picks for today. Some of them have held the bid and going sideways. We actually put on a new sell short yesterday in General Motors. A lot of people were asking about that. We'll take a quick look at that as well. But I want to walk you through the idea of what Clyde did and how that translates into a game plan. And you heard me talk about it a lot. I mentioned the stock market power pyramid often. It's a big part of our training, which is stacking the order flow. I want to say good morning to somebody. Allison, hey, good morning, Allison. Thanks so much for joining here us again today. So I want to walk you through Clyde's stuff. Okay, so I want to walk you through setting this up and what it looks like. So first, Clyde is talking about the trade, the stock. Let me actually make this a little bit bigger so that you can, where is it? Format, font, and we'll bring it up to 22. I just want to make this super clear. So first, he's talking about the stock and the duration that he plans to trade the stock. And long, in case you don't know, that means it's a buying opportunity. Next, he breaks down the indexes, okay, or the indices, and bearish to neutral. So this is Clyde's interpretation of the three major indices. So when we walk you through our conviction level, our confidence in risking money is because we built a really strong argument from the market to the sector to the industry group up to how that individual stock is performing. So what we're walking you through right now is how I train people to understand to build this argument. So ironically, we had a new member of our community, literally just started yesterday, and he typed in his first game plan, and the entire thing he wrote was, I won't say the symbol, but he basically said the symbol, and I'm looking for this stock to go up today. Compare that to what Clyde did here, which I think is just amazing. First, we start out with the market. So he's putting a tone to the market, bearish to neutral. So that's not the greatest condition. Now, one of the things I want to walk you through, and this is really, really important. When you are looking to allocate risk to ideas, you need to know, you need to start with perfect. If you start with perfect, then you'll know everything that's not perfect. And I know that sounds kind of obvious, right? But do you use that information to adjust your position size and your profit targets? So if we start with perfect, we know that we can maybe go in with a little bit extra leverage, maybe a little bit extra position size on your initial entry, then looking to add after it and when it moves in your favor. If you have perfect and you start to move away from perfect, and we're going to bring that back to Clyde's call out right now, anytime you move away from perfect, we call that conflict. So conflict means everything is not pulling in the same direction. So everybody's not pulling that rope in the same direction. All that money's not perfectly in the same direction. So that means we can still like the idea in the sector, the group, or the stock. But if the market's not perfect, we just need to work our way into that to get a little bit more feedback. That part that I just demonstrated, taught you, or whatever language you're comfortable using, that is what will keep you in the market when the market is tough. Because most traders mistakenly have the same risk, the same share size, especially on their initial entry, without acknowledging that the market got a little bit tougher. Maybe it even changed, and maybe you should be in cash. But there's certain ideas that you might still like. Again, we're talking about buying some stocks on the dip today, but you need to understand how to work into those positions. So I want to walk you through how all of that translates. So remember the word conflict. Conflict in trading terms, when you're creating a trading game plan, simply means it's not perfect, but you can go up the power pyramid and still validate accepting risk, because then you think that there's a good chance your profit target's going to be hit. So first thing is we're putting a context on the market. So not bullish. Bullish means we're not perfect scenario to be buying. And obviously the way the market is right now, we're anything but perfect right now, right? So acknowledging the fact that it's not perfect. Then we're breaking it down where Clyde goes into the sector. So again, working through everything that we do. Now you're going into consumer cyclical, and he knows that now if he's looking at a stock in consumer cyclical, he's going to start to break down these stocks and put them in a watch list on their own. Why? Because again, if you think about it, if what we are looking at is the market, and then we're going up for more proof, more validation, more feedback, where in what sector is there buying? So we're looking at PLAY, then we're going into consumer cyclical. So now Clyde, which I hope I'm inspiring you to do right now, is you will take the major stocks from consumer cyclical. And again, I'm giving you this list. All you got to do is get in the Facebook group and you get the whole template. You take those stocks now and you're like, okay, I understand what's going on in the market right now, but now I'm a little more focused on consumer cyclical. So let's pick somebody out right now. Let's say Josh. All right, we'll use Josh as an example. Let's say Josh has a hedge fund and he writes out this prospectus that says, I'm going to be a long-only hedge fund and I'm going to focus on consumer cyclical stocks and energy stocks, for example. So he would then train his research assistants to be looking at just those sectors and those stocks that he'll be watching from a fundamental perspective, a technical perspective, and all of those kind of things. So now we know that we're going to be watching consumer cyclical in addition to others in the market itself. So we're going to keep working our way through, right? And so you go from the sector down to the industry group, which is, again, power pyramid, market, sector, industry group, and then the stock, okay? Working our way down, this means bullish order flow. So that means the stock itself has recent bullish order flow. And this is kind of a proprietary way that we look at it. I won't get into that much detail, but these two things right here, and this is very important. When we teach order flow, when I'm teaching tape reading, you want to look at it from multiple angles. You want to hit that same idea from different angles to get more validation. Say, okay, I look at it this way, I look at it that way. Every story I'm looking at is telling me the same thing, and that will either increase your conviction level, or if you're looking at it from two different ways and you don't see it perfect, you're like, okay, there's conflict. I still like the idea, but because there's conflict, that means I need to work into the position as opposed to being aggressive on my initial entry. Now we're going to take it a little bit further. And I want to tell you, I love teaching this kind of stuff because for a lot of traders, they simply just go into the day saying, I want to be a buyer of the stock. Give me the exact price. The entry is kind of the very last part of that as far as building that argument to having conviction on an idea, because you could work your position size on the entry while you're getting feedback as it moves in your favor. So now we're going to work our way to the rest of it, okay? So obviously this is a couple of different ways that we look at to stack the order flow. Then he's breaking it down even further into how the stock is looking on the daily chart. Then talking about a Fibonacci level. So think about this. There's 1, 2, 3, 4, 5 different ways that he's analyzing the order flow here, okay? Now he's breaking it down a little bit further. ATR, if you happen to not know what ATR is a measurement of the volatility of a stock from the low of the stock to the high of the stock. So the low to the high, typically over 14 days. So what does that tell us? Well, you need to decide how much volatility that you can handle on stocks. And average true range is the average of the low to the high. So it's a pretty simple and, quite honestly, awesome way of determining the volatility of a stock and whether or not you can handle that volatility. You need to trade stuff that risk tolerance wise that you're comfortable with. So he's recognizing the average true range here, and he feels that that's a comfortable stock for him to trade. So what I want to do is I just want to give you a quick, I want to pull this into the screen because I want to show you how to find the average true range. Now you can pull it up on most softwares, but let's say we're looking at FinViz, this is the software that we talk about quite a bit. So what you would do is, let's just say for argument's sake, we go and we type Tesla in the top here. When you work your way over to pulling up Tesla on the right-hand side over here, you can see that Tesla's average true range over the last 14 days is averaging $53. So Tesla has some pretty wide swings, right? Compare that to, let's say, another EV stock, let's say Rivian. And the Rivian RIVN average true range is $6.56. So that's a big difference. $56 versus $6.56. There's a big difference in volatility. So that difference in volatility has to be something that you consider. How much of those swings can you sit through without going crazy and trading scared? So there's another part of the equation. So what Clyde is putting in here is he's acknowledging that in this stock play, $1.97, he's okay with that volatility, looking for the next swing trade. Okay, so we're going to keep going through this. Then he has his entry price, his stop loss, his initial profit target, which in this case, now this is really, really important. Remember how we just talked about the bigger picture of the market's not perfect. So Clyde is acknowledging the fact that the market's not perfect. So we call that conflict. As you acknowledge perfect versus conflict, if there's conflict, that means that you have to adjust your initial profit target, not how much you could possibly make on the trade, because we don't want to put limits on that, but your initial profit target in exchange for taking the risk. So typically we'd like to shoot for a minimum of 3-to-1 risk reward, but in a tougher market where it's less than perfect, you can shoot for 2-to-1, then shifting over into what we call the profit maximizer to see how much we could make on that. So I'm going to keep walking through that. So initial profit target is here, and that's the entry price. He even breaks it down to when and what price he plans to add and when he plans to move his stop loss to break even. And he's also getting in there and scripting out, depends on the market and if he will add shares or if he will exit at his initial profit target of 2-to-1. If the market increases and he decides to add shares, when he adds shares, he will move his stop loss to break even from his entry price and adjust his initial profit target up to 50. Now, the one thing that's after this is then shift to using the profit maximizer. So the profit maximizer is a way that we use when we have, say this is your profit target and it rallies up to your profit target. We do not want to put limits on how much we could make on trades because you need to pay for all those annoying losses with some bigger profits once in a while. Now, I want to say complete transparency. The market's been a little bit tougher in the last few weeks to hang on to bigger trades longer. We've been a little bit more in cash flow mode. We've been taking profits a little bit more on the momentum profit maximizer strategy as opposed to the trend trading profit maximizer, simply because of the market conditions. I think we can all admit right now there's a lot of conflict in the market, so that we're shifting ourselves down into, I get some money, I'm going to take it off the table and maybe trail the balance using the profit maximizer. But the way the profit maximizer works is after you build that entire argument, then you get to the point where it hits your initial target. Remember, the initial target is what you're accepting the risk for. You think you have a good chance of making that. When it gets up to the initial profit target, then we shift into a different profit-taking strategy because we've now achieved the goal based on the risk. And then we shift over into letting the stock fluctuate a little bit in exchange for a bigger move, maybe 4-to-1, 5-to-1, 10-to-1, depending on how the stock is trading. And now we move up our trailing stop to book profits, but we give it some more room to breathe. That's an entire script for trading. If that was a lot to you, what I would suggest you do is come back to this video, watch it once more time, leave questions either here or in the Facebook group if you get in there and get the template, because this is the difference between trading doesn't work. I had the losing trade. This is a part of trading. All of this is going into having the conviction that if I'm going to put my hard-earned money in the way of the market, I want to know that there's a pretty good chance it's going to move in my favor. I want to know how much money I should put into this deal, this stock trading deal to start. And then what do I plan to do if it moves in my favor or if it moves against me? This is why I say, and I don't say anything that we're on video. So I'm saying, I don't say stuff that I wouldn't want repeated. So I'm going to say this because I'm perfectly okay with it. The trading part of trading is easy when you script it out the way we just showed you. It's when you don't script things out, when you don't understand order flow, when you don't understand tape reading, when you don't understand reversing risk, when you don't understand breaking down the market, like we just showed you, small piece of it. But when you don't understand that, raise your hand if you're trading emotionally. We've all done that in the past. I did it in the past. That's why I created all of this, to have absolute confidence that after the market opens, I know exactly what I plan to do. Then I'm really just looking for entries and trade management. Remember, chart reading versus trading, you want to aspire to be a trader, but then after you put the position on, then what happens between entry and exit, that's where the money's made. So I want to put this on the screen for you one more time. If you want to take a snapshot of it, I'll be more than happy to let you take a snapshot of it. And let me just make the fonts a little bit smaller so you can see the entire thing. And I'll zoom that out a little bit, and I'll actually make it the whole screen here. So you can see the entire thing. So there's the stock, there's the breakdown, and then we shift all the way back into profit maximizer mode. So the stock that Clyde is using in this example is Play, P-L-A-Y, and you can see how he broke down the entire trade. So it's got some recent price action. It actually has now broke through this resistance level, having a hard time getting through that. So you got a push and a pause, a push and a pause, a push, a pause right where sellers came in. and now pushed through that level and now pausing. So he's looking for this next move up. So if you break it down and take a look at the stock based on how he did it, you can see the entire trade. You should be able to tell the entire trade and what's going on in the market without even looking at the charts. That's how good Clyde did. Clyde has been in our community now for a few months. He's in our Uplevel Pro program, which is our annual coaching program. I can't tell you how proud I am of Clyde for breaking stuff down like that. And that's what I'm hopefully inspiring everybody watching these videos to understand, that to have that absolute conviction in your stock trading, to expect to make money in the stock market, to make the stock market make you money. I'm challenging you now. You got to do a little bit of extra work. You have to put it on your calendar. Again, we talked about it yesterday. If you have a phone with an alert, put it on every day. Make an appointment with yourself to run your stock trading business and just learn how to do these scans, learn how to read order flow, learn how to read the tape. And then that last step is understanding how to script out your ideas. And you'll be so happy you are, because once the market opens, after you're in the position, it's really just a matter of like going to your sheet and saying, okay, I know exactly what I'm going to do next because I already scripted it out before the trade. Now, one big thing that's super important here is, again, raise your hand if when a stock moves up and down, your heart's beating out of your chest and you're like, it's moving up, you're super excited, moving down, you're angry. That's because you need to get the right share size. If you are treating your trading properly, you need to have the right dollar amount that you're willing to risk on each trade, because that's simply a business expense. No different than paying the lights, no different than paying your employees, no different than buying desks, buying computers, or buying inventory. Every trading loss, and I know nobody likes to talk about trading losses, but they're a part of what we do. You need to start seeing a trading loss as a trading expense. It's a business expense in exchange for the opportunity to run your trading business. You need employees, you need inventory, you need to turn the lights on, you need to buy your software. All of those are expenses that go into trading. So when you have an edge in trading and you have positive expectation and trades that don't make money, that's all a part of being a successful trader. It's the expenses, which are the losses, versus the revenue, which is understanding how to use the profit maximizer. That's how to run a trading business. Now, again, I'll admit the last few weeks, maybe even since 2022 started, the market's been a lot less than perfect. I think we can all admit that. As long as you understand that and you adjust your expectations, you adjust your risk, you adjust your position sizing, you adjust your profit targets based on what's available in the market, you're going to find trading fun, because you're not forcing the market to do anything anymore. Now you're just saying, okay, that's what's available. So that means this is the kind of script I need for the ideas that I'm going to take today as day trades or today as swing trades. So again, I hope that you watch this video more than once, because we just covered some stuff that is, it's a little bit high level stuff. I want to say hello to Catherine today. Hey, Catherine. Catherine's been in our community before. I want you to know how much I appreciate it. So I'm going to get into a couple more stock picks, and then I'm going to call it an end to the meeting. I promised I wanted to talk about some ideas today. So starting out today, we already mentioned Allstate today, and you can see that it's actually pushed up and kind of sitting in this box. So I'm looking at Allstate above 127, so it's got to get up to that level, and you can see the next level that I'm looking to push it up to. EXPE. Actually, I don't know if you saw this yesterday. There was actually a headline on CNBC yesterday that said that the hospitals now are seeing a 90% less pandemic cases. I don't know if I could say on the video, I have no idea, COVID cases, 90% less, something like 800,000 cases per day are now down to 80,000 cases per day. So again, thinking about how does that translate into trading ideas? Well, now we need to be starting to look at, maybe that's why energy prices are coming down despite what's going on in the Russia and the Ukraine, because now maybe we're going to start to look at energy coming down, airlines maybe going up, right? Getting out of the house. Expedia is one of those stocks that's on the radar right now. Expedia, actually, look at how clean this is. Push and a pause, a push and a pause, a push and a pause, a push and a pause, and now looking for the next move higher. We've also been talking about some of the airlines. You can see UAL finally got out of this box. We're looking for this box to hold support. You get the idea, right? You're working your way over into what would be affected if the market, meaning the world, starts to have a little bit of a get out of the house expectation. So I'm looking at airlines, cruise lines, travel agencies, that kind of stuff. If we are seeing the tail end. Oh gosh, I hope we are the tail end of the pandemic and we can start getting back out of the house. So a couple of other ones that I want to talk about. Actually, we walked you through yesterday. We actually mentioned this morning that General Motors was a sell short for us yesterday. So you can see it actually got down to this level. We waited for it to break through the level, and we have some room to go. It looks like it's up a little bit pre-market today, but down here is going to end up being the next level that we're looking for support. So roughly around $6 on that short sale. A couple of ideas on the long side. If you didn't happen to see it yesterday, SBLK showing incredible relative strength yesterday to the market, just really exploding. ABBV actually showing a gigantic bullish engulfing candlestick yesterday, where first of all, coming into the day, again, look at that pause, really good clean bull flag, push and a pause, a push and a pause, a push and a pause. Yesterday had a giant engulfing candlestick, took out the low, took out the high. You can see that we're looking for follow through there today as well. And kind of off the beaten path, maybe not necessarily perfect, but Micron and Qualcomm are two tech stocks that I'm looking for today. Qualcomm actually had some really good price action yesterday in the morning, as well as Micron. So the bigger charts of Qualcomm and Micron, two tech stocks, not necessarily perfect, but they were trading with really good volume yesterday, and they kind of got hit with the rest of the market. So again, if we break this all down, market's not perfect, tech is okay, but go all the way to the top of the power pyramid, we could see some ideas here. But because there's conflict, it's not perfect. I'd be looking to work my way into these positions, provided order flow unfolds from one day to the next. So thank you so much for being here with me, everybody. I want you to know how much I appreciate it. If you don't know, we do this Monday through Friday, 7:30 in the morning. Make sure you smash that like button if you found today valuable. And please make sure you hit subscribe so you get updates. If you want to get the videos I talked about before, make sure you click the link in the description and the worksheet template, which has all the sectors and everything like that. Go into the description and join the private Facebook group, and I'll see you on that side. You can ask some more questions too. All right. Thank you so much, everybody. I want you to know how much I appreciate it. Go have an awesome day today. Thank you.